Hi everyone, I'm Doug Alsdorf, and in this short video, we're going to see why renting is better than buying for years, but not for decades. And please, after watching this short video, read the PDFs and for Chapter 5, and particularly have a look at the spreadsheets that are available, the loan spreadsheet that's available for Chapter 5. That'll be very helpful. When buying a home or when renting, there are costs involved. And of course, we're all familiar with the monthly rent being a cost involved when renting a home. And we're also familiar with the idea that there's a monthly mortgage payment that we have to pay when buying a home. But there are additional costs that really do add up when buying a home. Those include property taxes, home insurance, and home maintenance. Now, there are gains that are made when buying a home, and that's the equity that we have in the house, in the structure itself, for example, or the property. Whereas over here, we don't necessarily think that, oh, a renter is making money. Well, in comparison to the homeowner, the renter gets to keep that down payment. There's often a 20% down payment that the homeowner has put into the house. The renter can keep that and invest it. Now, the actual numbers that are associated with some of these are exemplified by saying, how about a $500,000 house here in the Midwest? We'll see in a moment in today's interest world, and that's what I'm focusing on in this video, today's interest world, we'll see that the monthly mortgage payment is about $2,500 or $30,000 for a year. Property taxes on this house in the Midwest are about 1.75%, so roughly around $8,400 plus minus. Home insurance is going to be a couple thousand dollars. There's going to be a couple $1,000s per year in maintenance. For example, there's mulching and lawn mowing that are going to happen. Maybe an appliance needs replaced and so on. We can add those all up and see that they add up to $44,000. And of course, 12 times the $3,000 per month rent is $36,000. The renter is ahead by another $8,000. So not just the down payment, but $8,000 more per month that the renter can invest. There's another thing that we need to consider when buying a house, and that is this. The real cost of today's mortgaged home is this high interest rate at 6.5%. This is from the loan spreadsheet. We're going to have a look at that spreadsheet in just a minute. And again, I encourage you to download it for yourself. So here's the house. It's a $500,000 house. Typically, there's going to be the mortgage lender is going to ask for 20% down. So that's $100,000. So when the homeowner starts, they own 1/5 of the house when they first initiate their purchase at $100,000. Now, the spreadsheet automatically calculates the monthly payment. It's a 6.5% interest rate for 30 years, and that monthly payment is $2,528 per month for 30 years. There's an interest amount in that payment. All that interest adds up to over $500,000. This is an incredibly expensive house. It's not a $500,000 house. We have to add that interest in. It is a $1 million house. And that does not include all those other costs, the property taxes, the home insurance, and home maintenance. This is just the loan itself. So when this person buys this house, they're not buying a $500,000 house. They're buying a $1 million house and more over 30 years. Homeownership is incredibly expensive. Now, this is the loan spreadsheet, and we are on the buy or rent tab in the loan spreadsheet. And each row in this spreadsheet represents 1 year. Now, this is far too much here to investigate in this short video, hence why I really want you to look at those longer videos. But what we see in here, just at this scale, is we see some numbers over here that are positive, that favors home ownership, but here's all the costs here in red, and that's what is the negatives for home ownership. We're just going to zoom into these three boxes to get a better handle on what those are telling us. So here's the $500,000 house growing at 4.5% in this column, but the actual amount that the homeowner owns is the equity in the house over in this column. We're going to subtract off all these red values. Those are all those costs we just saw back up here. We're going to subtract off all of those year after year, and we see that the homeowner is actually losing money on this investment in this scenario. And they continue to lose money for a long time. And you can get into the spreadsheet to see how long. It's about 30 years. That's amazing. But, even though you're losing money, you got to live somewhere. So that's the costs that are happening. Over here, we see the renter with that down payment of $100,000 that they've invested, plus they get that extra $7,000, $8,000, $9,000 per year that they can invest. But we got to subtract off their $36,000 per year from that. And we see that finally here in about the fourth year, the renter is actually finally losing money, but the homeowner's been losing money for quite a while. And they're both negative. In other words, they're both losing money. It's just that the renter is losing less money compared to the homeowner. Eventually, though, here in the eighth or ninth year, that's when the homeowner is losing less money compared to the renter, and therefore the homeowner finally is ahead of the renter. But for those first 8 years, the renter is ahead of the homeowner in terms of these financial considerations. How about some other scenarios? We're going to take that exact same scenario we just looked at. Well, let's change the interest now to 3.25% instead of 6.5%. Wow, this is fantastic. Now the homeowner is doing better after the third year. This would be a really great time to buy a house. But these are not the interest rates that we're seeing in today's world here in 2025. Now let's do a scenario where we favor the renter instead of before we were favoring the homeowner. Now let's favor the renter. Just drop that rent by $500, everything else being the same as what we've just been going through. Now the renter is ahead for 15 years, not for 8 years, but for 15 years. Wow, that's amazing. Those are what the numbers are telling us. Let's switch out to the coast. Out on the coast, it's $1 million house out there on the coasts, and the rent also goes up, but we're going to keep that same interest rate. Well, now the renter is still ahead for 8 years. What happens if we lower their rent, but with that expensive $1 million house, but it's now a $5,000 rent? Now the renter's ahead for 15 years. And so what we've learned in these numbers in this spreadsheet is that today in 2025, with 6.5% interest rates on home loans, renting is better than buying for years, but not for decades. And I do urge you to download the loan spreadsheet and figure it out for your own particular scenario. And there are plenty of videos. I have a couple of videos that help you to understand how to work the loan spreadsheet.